Hi, this is Ian Foster from BeAWinningTrader.com, and this is my analysis for the week commencing the 30th of October 2023 on some of the foreign exchange pairs, Forex pairs that I trade, on a couple of the major indices, and on crude oil and gold. So I'm going to start with the FTSE this week because the markets, the equity markets have been pretty volatile recently. And one minute they're looking pretty strong, and the next minute they get a slap down, or perhaps early in the day they're looking pretty good, and all of a sudden late into the day, especially in the US markets, they're starting to get a sell off, etc., etc. So they have been trying. The buyers, the bulls have been trying to keep the markets up, but look, they're failing as we speak. Now, I know when we're looking here, and this is a weekly chart of the FTSE, you can see there's a sideways action here in the weekly market. We're trading from around about 7,200 up to just above 7,700 this last number of weeks. And again, this market now, as you can see from this very last weekly price bar, this is a very bearish bar. And the reason it's a very bearish bar is because the close is closer to the low here than it is to the high. And it's coming up to previous support levels. And those previous support levels are at 72.14. If we click over to the daily chart, looking at Friday's price action, you can see that on Thursday with a very bearish bar. On Friday, we tried to rally, and we rallied into the range of Thursday, but you can see that the probability was that we'd take the low out before we take that high out. And again, that's what happened. So therefore, it was actually only an opportunity from which to sell the market, short sell the market on the rally. So we've got the same scenario. So we have for the beginning of the trading week, because we've got price action objectives to take the low out, and that low is a low of 72.59 out to the downside. Now, admittedly, it's not going to take an awful lot of downward price movement for that to be achieved. But what I will be looking for, if I zoom out and go back to the weekly chart, I will be looking for these previous support levels. Now, here we've got a lower confirmed high than this high. Up here, we've got a lower confirmed high, and we should make lower lows. But again, as you can see from the horizontal line here, I can see support coming in. Now, if I flick on to a 1 hour chart, you can see that we're in red price bars. You can see the rally here where that market rallied up, but again, it failed, and very quickly the red price bars come in. Now, the red price bars are indicating, it's my proprietary software trading tool, and they're indicating that there's greater selling pressure than there is buying pressure. Blue price bars are indicating greater buying pressure than selling pressure. When we go green, it's neutral. So again, we've got selling pressure here on the 1 hour chart, and that is matched again by the daily and weekly. So for the FTSE, I will be probably watching early price action. Certainly, if we do not take the lows of Friday out, or the weekly lows of the week that just closed on Friday, if we don't take those out early on and we do rally within those ranges, then I will be taking opportunities to sell the market and using that as an opportunity to sell. Or on the other hand, if the market does go ahead and continue in the negativity that it closed on Friday, then I will be looking around these previous lows around about 72.28, 72.14, etc., etc. So around the 7,200 level. This one here was a low of 78.50. Let me see. Sorry, this one here was a low of 72.03. So this is where I will be looking for the market around the 7,200 if it takes the lows out, to see do we get a retracement. But again, I have to say that it looks like I would want to be short, not long, this particular FTSE market at this minute in time. If we go to the US 130 Dow, exactly the same, folks. So we're now starting to get the major markets in tandem with each other, which is great, because when you've got one major market indicating bullishness and another one indicating immediate bearishness, then that creates confusion, because one's going to be right. One is going to be right. So again, you can see that we've closed very close to the lows and the weekly lows here, 32.386 in the Dow. We've also broken through this previous support if I put on a horizontal line, and we've just closed below that previous support in here. So again, we have to indicate and think that the next major support that this market is going to go to has to be down at 31.425. So again, that's another, certainly another, quite a distance away, shall we say, 31,425 and 32. So there's 1,000 points in that particular market there, plus 1,000 plus, I would have to say. So again, the same thing applies. We've got a very bearish daily bar. We did try to rally again on Friday, not as strongly as we did try to rally in the FTSE, and that market has come off quite considerably. So again, certainly sell signals for me there, and depending on whether there's an intraday um, buy opportunity after these lows have been achieved. In other words, the price action objectives of these lows have been broken to the downside. If that does not happen and we trade inside those ranges of both the weekly and the daily charts, that's the daily and the weekly chart of this last week that's just closed on Friday, then it'll be selling opportunities. Again, I would be wanting to see where this market goes, but I would be looking to take any intraday or intra-week rallies as an opportunity as we speak. But you have to be flexible in your approach now as a trader, because you can't be rigid, because the markets do turn around quite aggressively. But every time that they have turned around recently, to indicate in the equity markets, especially to indicate that there's now perhaps a bottom in place, because people are looking for bottoms, let me tell you, and that's dangerous. We don't want to look for bottoms. Go and trade with the trend. Go and trade with the herd. Okay, looking for bottoms or looking for tops is a very, very dangerous strategy to take on. And again, trying to pick bottoms is very hard. And the only way that you'll ever know whether there's a true bottom in place is when the market tests a low like this down here and it comes back up again and then comes retraces again down. And providing that low there is going to be a higher low than that low, then we can confidently say that there's a bottom in place. But we haven't got that at this minute in time. And just the last major equity market I'm going to look at is the DAX. It's a market that I trade myself, and it's a market that I trade within my Discord channel. And you can see it exactly the same thing. We had a very bearish bar starting on Wednesday. We had a bullish bar on Tuesday, and we took out the high because the objective was to take the high out before we took the low out. And it did do that on Wednesday, and then it closed very bearish, indicating weakness. And again, Thursday was a follow on. Friday was exactly the same, folk. Each occasion, and the same as on Thursday. You see here this low, so therefore it should have taken out that low before it takes out the high. And then what does the market do? It tries to rally before it does that. That is an opportunity from a trader's perspective, and this is why using price action, being able to analyze price action correctly, is the only and the best approach. And if you trade price action and then around that keep your stops, keep your risks small, then you will not go far wrong in relation to taking 2 or 3 steps forward and only 1 or 1.5 back when the market doesn't work out as anticipated for you. So again, bearish bar, and we've had that continuation now on Friday. Now, there's one area in the DAX here that I'm looking at, folk, and we might get that early on for a little bounce on Monday. And that is down here at 14,448. So, we've got another 140, 50 points here to go, 60 points, maybe 160 points until that support line. So therefore, we're going to get initial weakness. I'm pretty confident we follow that up there. You can see there on the daily chart, we have got red price bars, obviously lower lows and lower highs. In fact, normally I don't have them on the daily charts, but again, there's the 4-hour chart and the 1-hour chart. Also, laterally, it tried to rally in here when the market started to go a bit sideways. And then, thank goodness, we came into an intra-day late rally, dare I say, or late fall, dare I say, but a trending move on the DAX. And that has been confirmed then by the closing bearish weekly bar. In fact, it's an outside daily close bearish bar on the DAX. Now, that is the most single powerfully price action bar setup. And the reason it's an outside vertical bar, it's made a higher high than Thursday's high, and it has made a lower low. So we're very much looking to continue in the downward stance here. So let's take a look at a couple of the major Forex pairs that I trade. And I'm going to start off firstly with the pound yen. It's again a market that I trade, and it's a market that I trade live on my Discord channel. And we put up live signals last week. Was a phenomenal week for us. We started off with a couple of good trades on Monday, and it just went on and on and on. So here we have the pound yen on a weekly chart, and you can see that we have a very bearish weekly bar close. In fact, it's an outside weekly bar close. Is it? Just let me check. the low of um, the low of last week was a low of 181.08, which I should have known. And we went, I don't think we broke that this week, did we? We went to a low of 181.04, so we did break it. So it is an outside weekly vertical bar to the downside. Why do I say to the downside? Again, simply because we have a close that is closer to the low than it is to the high. Now, again, they're talking about sterling. If you listen to analysts, I should say, which I don't really much do, but they're talking about sterling getting weaker simply because there's going to be a pause in our interest rates. So, in one aspect, that is going to be detrimental to the strength of our currency, but on the other, it's going to help in so many ways in relation to business, in relation to exports, etc., imports. So, anyway, let's just trade what we see in front of us. Now you can see that we've got a daily bar here also, which is what I call a railroad track. Why do I say that? Because we had a bullish bar on Thursday, and then we've had a bearish bar on Friday. So if you just isolate those two bars, it's like a railway line. One going up, one going down. Now, they also, technically speaking here, the low on Thursday was a low of 0.5 and the low on Friday was a low of 0.4. So it is very like an inside bar, but it's just broken by a pip. But the important factor here, as far as the pound versus the Japanese yen is concerned, again, it's a bearish daily bar, a bearish weekly bar, and this market certainly appears that it could have a little bit more of a downside natural retracement, because remember, it's went from down here, which is at 149, right up to 186. So there's plenty of room for sterling against the yen to actually make a retracement and give us plenty of opportunities from a trading perspective from which to make money on a retracement here without actually affecting the overall trend. And let's face it, yes, there was support in there. That is not a key significant support line for me. And the reason I say that is because we cannot have a key, there wasn't a key significant high in here. There is up here now. This is different, but obviously, again, the first area we would be looking for that market would be 176.15, which was the previous support, not a key support area. I say to you, that's not a key confirmed low. In fact, I would be looking for this market to go down a little bit lower than that before it would retrace and give us an opportunity to get long again. And that would be maybe down at 172. Now, that would be beautiful because we're at 181 on the close. 181.33 was the close on the Japanese yen. Again, if I go over to a 4-hour chart, you will see from that we've got a lower confirmed high. We've got red price bars, but that high there is a lower high than this high up here. And it's a confirmed high with red price bars indicating that there's greater selling pressure than there is buying pressure. So again, for me, I will be looking to short any opportunity or any rally that occurs, an initial rally in the pound yen. I will be certainly looking at opportunities from which to take short positions on that. So let's take a look next at our pound dollar, otherwise known as cable. And again, we've got an outside weekly vertical bar on cable also, just this bar, because that is a higher high and a lower low than the previous weekly bar. Okay, it was a small range bar. And when you see small range bars, no matter what instrument or you're looking at, then you know that the market is actually, it's what we call low volatility. And low volatility means it is gathering strength, a little bit like a swimmer that is either swimming under the water and he's coming up for a breath, and then he's going to decide whether he's going to turn around and go the opposite direction or whether he's just getting a breath to gather further strength to go in the direction that he was going. And this is very similar to when you're analysing a single price bar, and when you've got an outside vertical bar, the most singular powerful price action bar that there is, and it's a bearish bar, that would indicate that the low here, 180.104, would be broken to the downside before any highs. So again, shorting opportunities for me on the, sorry, not 181, I'm thinking of the pound yen. The high up here is a high of 122.88, because we're talking about the pound dollar now. The same thing, a very similar price power pattern to the pound dollar and the pound yen. Now, if we go on to the euro dollar, the euro dollar again is also showing weakness. Now you can see here we made a higher high than this high, and then we've broken this previous confirmed low. That is a significant low. So it is. And also, if I draw a horizontal line across here for you all, you can see that we've now broken through that previous support, not only here, but here. And this market tried to rally up to 107.23 and failed. So if we go to the price action of Friday, you can see that it did try to rally on Thursday with a bullish bar, and it did continue in that vein of the early part of Friday, and then it started to sell off. Now we have closed on Friday closer, well, it's a more 50-50 bar. It's probably, when the closes is probably in the middle of that bar. So therefore, that's also indicating sort of indecisiveness. But on occasions like that, then you have to take another step and look at the bigger picture. And that bigger picture is very clear. There's no indecisiveness in the euro dollar on a weekly bar basis. We should break last week's low, which was a low of 105.22 to the downside this week. We close at 105.65. So again, what I will be doing in the inter part of my trading, if I'm trading the euro dollar, I will be looking for any strength that's in that market. Any strength in that market, I will be looking to sell that market until such times, if it were to be really strong, that it started breaking last week's high up here at 106.94 to the upside. But anything up to 106.94, I will be looking for lower intraday or intra-week highs from which to sell that market to come down and take those lows at 105.22 out to the downside on the euro dollar. Dollar yen also, the dollar has been pretty strong again, the yen folk, and I have drawn in, again, this is in a weekly chart, I've drawn in previous resistance up here where the market started to fall back, and you can see the way it's coming into play again, because look what we've got on the dollar yen. Another great market to trade because there's volatility there. Volatility means that when we get a move and we can get a trade that is actually trending in duration in the direction of the bigger price bars, such as the weekly and the daily, then you can really get a move. And then when it doesn't go for you, the key then, as it isn't trading across the board, and that is by keeping your losses small. And especially when you're trading the likes of the pound yen and the dollar yen, as far as the Forex pairs are concerned, and any other Forex pair, it doesn't matter, but those in particular, because you can get 100 pips, 150 pips very, very quickly when this market starts trending. So therefore, we want to keep our analysis on the bigger price action charts. We want to keep our analysis on those very close to our minds, so we do, because if we're taking trades on the smaller time frames, we want to know exactly what the setups in the larger time frames are. And you can see here that we've got a very bearish weekly bar. So we have on the dollar yen indicating to me very clearly that we should break 149.32 to the downside before we take the high out here of 150.77. So again, it was a reasonably lowish range bar as we've had this last 2 or 3 weeks. But the key significant was the previous 2 weeks we've been trading inside. It tried to go down. We're trading inside this bullish weekly bar, look, because that close was closer to the high than it was to the low. And indeed, it achieved that weekly price action objectives of satisfying that bullish weekly bar, and then it sold off. And if we flick over to the daily chart, you can see here what happened. We had a bullish bar on Thursday, and we took the low of that bullish bar out to the downside when we should have took the high out first. That there is like flipping a coin, everybody. That is bearish in its own right. If it had done the opposite, it would have been bullish, but it's done the bearish because it's done what it shouldn't technically have done. It should have technically taken the high out, but in this instance, it took the low out before the high, and that is an indication. Also, you can see Thursday's price action was the day that it satisfied that bullish daily bar. So look for the number of days that we were trading inside that bullish bar, and now that we are out of that, we've got a greater and a more clear picture. And the dollar yen is one of the markets that I will be looking at myself for the coming week. Again, what am I looking at? Initially, I am definitely going to be looking for any rallies that occur in this market. I'm going to be using those as opportunities from which to sell that particular market. Now, very quickly, folks, I don't want to keep this much longer. I'm going to very quickly look at crude oil, and we'll look at gold. And you can clearly see here, this is a daily chart of gold, that it's, look where it came from. It is bullish. It came from $18.11 right up to over $2,000, closed at 2005. Now, if I flick on the weekly chart, you can see the weekly chart exactly the same. Look, we've had This is the power of just being able to read one single price action bar correctly, because what it all started off with a low bar, low volatility bar, but it still closed closer to the high than it did to the low down here. And look what we had: one, two, three. This last 4 weeks, this market has indicated this last 3 weeks, and then the close on Friday has indicated bullishness. On that there market again, if we just do this very simple, we look to go up here to 2070. Why do I say 70? Because if we take a look at to the left of your charts, so when we're looking at technical analysis and we're looking for indications of where this market may go or where there may be resistance or support, always look to the left of your chart. And you can see that it came off once over here. It came off twice over here, just broke up through it and came immediately off it. So now I can see that I think gold looks, from what I see in front of me, to be heading up to this 2070 area again. All right, $2,070 an ounce. So that again, if you're trading gold, of which I do periodically, again, that's what we'll be looking to do. And if we just, you can see a sideways on an hourly chart over Friday's price action and Thursday and Friday's price action, and all of a sudden then it took off to on the last couple of hours, and we've got blue price bar. So again, what I will be looking, if I'm trading gold this week, and remember, there's only so many instruments you can trade, okay? So I'm not going to say that I'm trading them all. Pound yen is definitely one of mine. The DAX is one of mine. S&P 500 is one of mine. And the dollar yen I like quite a lot. Again, I haven't been trading it this last couple of weeks, but you can't trade everything. So for me to turn around and say I'm definitely going to trade gold, no, I will not manufacture a trade. If I see something that I like in the gold market that is very clearly sticking out to me, what would that be? That would be a retracement into either the daily and weekly bar ranges of last week, and I would be looking for blue price bars to go long. Okay, that's what I would be doing with gold. You can see the 4-hour chart in gold has been long from some time back, folk, and it continues to be blue and continues to indicate long trade. So therefore it's very important when we're analysing, even from an intraday basis, if you're trying to take trades on an intraday or an intra-week basis, always look at the bigger price action charts. It's so important, because it's much better to take trending trades and not counter trending trades. So the last market we're going to look at very quickly is going to be crude oil, a market very close to me and a market that I trade a lot. So it is. So crude oil, from the bigger picture, folk, this is the weekly chart, is not very clear. Okay, it went into this rally and it went up to a price of just above 95.37. Okay, and again, this is a weekly chart, but do you see this bar here? And I'm just going to zoom in here. This bar here is a very bearish weekly bar, and that is indicating on a probability basis, that should take the low of 81.70 out to the downside. Right now, you can see this last 1, 2, 3 weeks it's been trading inside this bearish weekly bar. That weekly bar there is telling me that crude oil should take the low of 81.70 out before it takes the high of that bar out to the upside, which is 92.14. Okay, now so therefore, when you're looking at the bigger picture here, it hasn't been that clear. So technically speaking, any rally, because it looked not so much this week, but last week, the week before, the week that just closed on Friday, it looked bullish. You could say, well, maybe this bearish bar is going to fail. And remember, if it fails, folk, that means by it's taking the high out when it should technically take the low out. And that's again like flipping the coin on its head, indicating that this market now has turned around and it looks to be heading north, but it hasn't. Crude oil has not done that. And again, we've closed on a weekly basis very much on a 50-50 bar. The bigger picture, the bar to its left, is telling us that this market should go down and it should take those lows out down here. Okay, where I've just drawn that horizontal line. That's what it should technically do. Okay, and if we go to the daily chart in crude oil, you can see where we're going. We're bullish. We're inside on Thursday, and then Friday we're bullish again. So what is that telling me? It's telling me for the beginning of the week there's a greater probability of crude oil going up and taking Friday's high out to the upside. But then again, folk, I'm not that massively interested unless I'm trading on a very short time frame chart, which I do in the futures market. I'll just trade the signals that I see. But if I'm trading on anything like off a 1 hour chart, um, I will certainly be looking to take trades in the direction of the bigger trend. And that bigger trend, I have to say, in crude oil, although it's been sideways for 3 weeks or so, the indications are, based on probabilities, remember, that that market should break to the downside before it breaks to the upside. So again, I will be using any rally. If I'm taking a trade off a larger time frame chart, I will be using any rally to look for sell signals for that 81.70 to be broken to the downside. Now, I hope you've enjoyed this analysis. And let me tell you that if you want to learn more, please go to beawinningtrader.com. And if you put in /masterclass, you can sign up. You can actually watch a webinar, a masterclass, a trading webinar, masterclass, from which I will explain in greater detail how my price action methodology works, and then how the effectiveness of using our software, proprietary software trading tool on top of our price action analysis really can create an edge for us in relation to making decisions, directional decisions in the markets, no matter the time frame or indeed the instrument. But thank you, and I hope you enjoy. All right, thank you.